It is the 21st of November 2022. This is the week of Thanksgiving in the United States. So if you're in the United States, I would like to wish you in advance a happy Thanksgiving. My name is David Hickson, and in today's market update, we're going to be taking a look at the euro to US dollar. My recent updates about the US markets and gold have been playing out pretty much as expected, and so there isn't anything new to add there. If you're interested in those analyses and haven't seen those recent videos, I would encourage you to go back and take a look at those videos. And of course, we now have our new analysis service, Hurst Cycles Notes, which I have mentioned in the past few market updates. If you have not yet subscribed to our Hurst Cycles Notes newsletter, I would encourage you to take a look at that site and subscribe to the newsletter to keep up to date with what the markets are doing. And so with all that analysis information available, I have the opportunity in these market updates to spread my wings a little and start taking a look at some other instruments that have been requested by you on YouTube. In today's video, we're going to be taking a look at the euro to US dollar. Here is a weekly chart with data going all the way back to 1998. The euro is always a very interesting and fairly difficult instrument to analyze. There are a few points to make about the euro. I've been very interested in the euro, of course, because I live in Europe, and so analyzing the price movements of the euro against the US dollar has always been of great interest to me. There are several useful things to note before we get into the nitty-gritty of the analysis. The first thing is that we have a major trough over here in 2010, and then we have another major trough over here in early 2015. You can see in this analysis the 2010 trough has been phased as a trough of the 9-year cycle, and the 2015 trough has been phased as a trough of the 54-month cycle. That all looks well and good. However, take a look at the shape of the price action that played out between those two troughs. The first thing that you will probably notice is that it is forming a usual M shape. Nothing particularly unusual about that, except for the fact that it is playing out over a 54-month cycle. You will know that in Hurst's default nominal model, there is a 3-to-1 harmonic ratio between the 18-month cycle and the 54-month cycle. And so, in fact, we should find not an M shape, but a sort of a triple M shape. I'm not sure what the name for that would be. In other words, we should really identify 3 18-month cycles within that 54-month cycle. This is something that has bothered me for many years. I have a solution to it as a matter of interest, which I'm going to propose in a moment. But you will notice that in this analysis, because this is the trough of the 9-year cycle and this is a trough of the 54-month cycle, the software, Sentient Trader, has indeed positioned 3 18-month cycles, or in particular 2 18-month cycle troughs, within that 54-month period. The result is that you get a fairly anomalous analysis during that period of time. If we zoom in and take a look, you will notice that we have our 3 18-month cycles, and our first and third 18-month cycle look fairly good in terms of their cycle shapes. But this second 18-month cycle does an unusual thing, which is that the central point of the M shape drops below both the beginning and the end of that M shape. That is not an impossible situation, but it is, in my opinion, not really an ideal situation. It is a bit of an anomaly in this analysis. Why might this be the case? I should remind you that in the 1960s, when Hurst was performing his original research into the price movements of financial markets, he was studying the price movements of stocks in the US market. In other words, stocks that were listed on US stock exchanges. And the principles that he defined were based upon his findings in analyzing those stock market price movements. Who is to say that the price movements of a currency might follow slightly different rules? In particular, when resolving this particular anomaly, Hurst declared in his principle of harmonicity that the wavelengths of cycles in the nominal model are related by a small integer value, either 2-to-1 or 3-to-1. He observed that in the price movements of stocks, the harmonic ratio between the 18-month cycle and the 54-month cycle was a 3-to-1 harmonic ratio. But is it possible that when it comes to currencies, the harmonic ratio that is actually at play is a simple 2-to-1 harmonic ratio? That wouldn't actually deny anything that Hurst declared, and it doesn't go against his principles in any way. And so one way of possibly resolving this issue is to work with a different nominal model that has a 2-to-1 harmonic ratio between the 18-month cycle and the 54-month cycle. Those cycle lengths, of course, will also vary to accommodate for the different harmonic ratio. Another interesting point to note about the analysis of the euro against the US dollar also comes down to an interesting observation about the original research that Hurst performed being based on US stocks. And that has to do with the principle of synchronicity, in which he told us that the troughs of cycles which influence the price movements of US stocks are synchronized where possible. The mathematical result of having synchronized troughs is that you tend to get sharp, isolated troughs, but then you also get rounded, clustered peaks. Now, is it possible that we have a few rounded, clustered troughs that have formed in the euro to US dollar, and we have sharp, isolated peaks? Therefore, is it possible that we should be paying more attention to the peak analysis than to the trough analysis? Is it possible that the cycles that are influencing the euro to US dollar are in fact synchronized at their peaks and are not necessarily synchronized at their troughs? I certainly think that it is possible. However, there is another interesting thing that happens with many forex pairs, and the euro to US dollar is a good example of that, and that is that sometimes we do experience sharp isolated troughs, and sometimes we experience sharp isolated peaks. It seems as if the synchronization of the cycles seems to shift mode from being synchronized at the troughs to being synchronized at the peaks. That is an idea that we could discuss for many hours, but we're not actually going to dwell on that today. Let's take a look at the analysis as we have it here with the default nominal model based on US stocks and ask ourselves what might be happening in the euro to US dollar at the moment. I have a dual analysis on this chart. In other words, I have an analysis at the foot of the chart based upon the concept that the troughs that are influencing the price movement are synchronized. I have another analysis, you must bear in mind it is a totally separate analysis, that is based upon the idea that the peaks are synchronized where possible. Those two analyses work together in a fairly interesting way. But for the purposes of today's video, let's just take a look at what this analysis is telling us. Let's start with the troughs, because that is the usual starting point in any Hurst cycles analysis. We had an important 9-year cycle trough in the year 2000, another 9-year cycle trough over here in the year 2010, and then the next 9-year cycle trough was over here in 2019. I'm going to zoom in a moment and speak about that 9-year cycle trough, because the more obvious position for the trough is in March of 2020, which might be a familiar date to you, but we're going to discuss that in a moment. The important thing is that following the trough in 2010, we have experienced one and now two 18-month cycle troughs in the euro to US dollar. We're going to come back to that in a moment. Bear in mind the possibility that there might not be a 3-to-1 harmonic ratio, but a 2-to-1 harmonic ratio. And we're going to take a look at a different chart that considers that possibility. Now let's turn our attention to the peaks. We had a 9-year cycle peak over here in 2008. Then we had the next 9-year cycle peak over here, all the way at the end of 2020. That doesn't sound very much like a 9-year cycle. Of course, we have the principle of variation, which tells us that the cycle wavelengths and their amplitudes are constantly varying. They are, of course, dynamic cycles. And so a 9-year cycle that extends to a length of almost 12 years is not impossible, but it does seem a little unusual. Again, we need to ask ourselves, is the peak analysis valid, or is the trough analysis more valid at the moment? Certainly the fact that there was a 9-year cycle peak over here at the end of 2020 does explain the strong movement down that we have experienced following that time. But now let's zoom in and consider the interesting placement of this trough over here in 2019 as opposed to 2020. Here is the position of that trough in this particular analysis, but here is the more obvious trough position in March of 2020. You will know that that is a trough that I sometimes refer to as the pandemic trough. I think it is possible that the news events that were sweeping around the world at the time caused tremendous volatility in the markets, and that this particular trough was a result of that news-induced volatility as opposed to actually the correct trough position. And that is certainly what this analysis is showing us. Positioning this trough over here enables us to phase the 18-month cycle trough at a fairly obvious position over here towards the end of March last year. Let's zoom in and consider the big move down from the end of 2020 into September of this year. First of all, if we measure the number of days that elapsed from that trough at the end of March last year to this trough that formed at the end of September this year, you will notice that the number of days is 546, or 17.9 months. When I see those numbers appearing on charts, I think it's time to sit up and take notice. The average length of the 18-month cycle discovered by Hurst was 546 days. The exact number of days that elapsed in the euro to US dollar. In my opinion, that supports the idea that this was a trough of 18-month magnitude, and that this was also a trough of 18-month magnitude because the number of days that elapsed between those two troughs was of exactly the average length that Hurst discovered 50 years ago. As you can see, since then, the euro to US dollar has been bouncing fairly strongly out of that trough. But now let's come back to an idea that I mentioned at the beginning of the video, which has to do with the harmonic ratio between the 18-month cycle and the 54-month cycle. And those cycle lengths, of course, come from Hurst's default nominal model, and they would change if we change the harmonic ratio between those cycles. Let's take a look at a different analysis of the euro to US dollar. This analysis resolves the anomaly pointed out on the other chart to do with the harmonic ratio between the 18-month cycle and the 54-month cycle. This analysis works with a nominal model that has a 2-to-1 harmonic ratio between the 18-month cycle and the next longer cycle. The 18-month cycle in this particular nominal model does have the same average length as it does in Hurst's default nominal model, the 546 days that he discovered 50 years ago, and which, as we have seen, is still alive and well in the euro to US dollar today. But the next longer cycle in the nominal model that this analysis is a result of has a length of roughly 40 months as opposed to 54 months. You will notice that this analysis works a little better, certainly in my opinion, than the other analysis that we were looking at. Most of the big cycle troughs over here on the chart are indeed phased as important cycle troughs in the analysis. That doesn't necessarily prove that it is a better analysis, but it does certainly work a lot better in terms of giving us a more regular cycle analysis at the foot of the chart, and it also provides a more regular cycle analysis at the top of the chart. You will notice that the 2-to-1 harmonic ratio works much better for the peaks as well as it does for the troughs. And so, in my opinion, this particular nominal model works better for the euro to US dollar. As a matter of interest, it works better for other currency pairs as well, the British pound to US dollar and many other currency pairs. Let's zoom in and see what this analysis is telling us is happening at the moment in the euro to US dollar. And this is where things get really interesting. First of all, here is a trough of the equivalent of the 9-year cycle in the default nominal model. In this nominal model, it isn't, of course, a 9-year cycle, it is about a 6-year cycle. Then we have our next 40-month cycle trough. You can see this has been phased under the pandemic trough of March 2020. It might be better positioned over here, but in fact, because of the slightly different cycle wavelengths in this analysis, it doesn't affect the fact that this trough over here has been phased as a trough of the 18-month cycle. Therefore, we still have our perfect 546 days that elapsed between that 18-month cycle and this 18-month cycle at the end of September. But now you will notice the dramatic suggestion posed by this particular analysis, which is that the trough at the end of September was not a trough of only 18-month magnitude. You will remember in the other chart it was the second 18-month cycle trough following the big trough at the beginning of 2017. This trough, according to this analysis, is not merely an 18-month cycle trough, but could in fact be a much greater magnitude cycle trough. I'm frightened even to say it. According to this analysis, that trough has a magnitude of 12 years. Let's zoom in and take a look at a little more detail here as well. There is that very dramatic 12-year cycle trough. You can see that the diamonds that have been placed below the trough are in fact hollow. They are not filled in, which means that it is a tentative trough placement. But if you take a look at the details of the analysis, you will notice that it in fact makes a great deal of sense. All of the previous cycle troughs that have been found in the analysis are indeed fairly convincing troughs in the price movement. This entire downwards move is also well explained by the idea that price was moving from a 12-year cycle peak over here down to a 12-year cycle trough that formed in September. This is a very dramatic possibility for the euro to US dollar, and you probably know if you've watched any of my videos that I tend to take the placement of the very long cycle troughs with a pinch of salt. I am not absolutely convinced that that very long 12-year cycle trough has formed, but I am certainly going to be watching with great interest as the price action unfolds. You will see that following that trough, which is of at least 18-month magnitude in my opinion, but might be an even greater magnitude trough, we have had a good bullish 40-day cycle elapse. And then, of course, we've had further bullish movement as price moves up to this peak over here. Now price is moving down into this 80-day cycle trough, and as price action unfolds, we will continue to monitor the potential magnitude of this cycle trough that formed at the end of September. I've left the peak analysis showing on this chart because, as you can see, the peak analysis suggests that we are rising into a peak of 18-month magnitude. That would certainly cause price to push downwards with some extra bearish pressure if that is a peak of 18-month magnitude. But for now, I am not going to focus on the peak analysis because this trough analysis is particularly intriguing. We will be watching the euro as it comes down into this 80-day cycle trough, expected in about the first week of December. And when that cycle trough is in place, we will be able to take a look at the cycle shape of the 80-day cycle, which at the moment is looking like this, to determine just how bullish this market really is. I do hope that you found this market update useful and interesting. Don't forget to go along to our Hurst Cycles Notes site for more Hurst Cycles analysis. If you have any questions, join us on our Hurst Cycles Discord server or ask your questions in the comments below this video. I look forward to hearing from you.